I don't care how good you are in anything. You don't have discipline. You ain't nobody.
Right.
You're nothing without discipline. Because you give up on the slightest struggle without discipline. Discipline is doing what you hate to do, but do it like you love it.
Hey everybody, we're here with Jeffrey Hirsch from Almanac Trader. I'm a subscriber of Jeffrey's. I've been buying his the Stock Traders Almanac for years. My great great uncle also as well. So I mean, it's been something that I've definitely have paid a lot of attention to over the years. Jeffrey's good people, man. I'm glad to have him on here. Glad to have a chat. How are you doing today, Jeffrey?
I'm great, man. I appreciate you being a subscriber and hearing that, it's been in the family for years, just like for me. So it's a pleasure to be with you, and it's glad to see it's nice to see somebody who follows what we're talking about and understands the combination of seasonals and fundamentals and technicals and looking at sentiment as well, and not just somebody who's, pure fundamental or pure technical. So what can I tell you today? What are you interested in? What are you looking at? What can we expand on?
So yeah, there's so many things, and I guess the first thing to start with is why are seasonals important? That's the first thing that a question I always get when I talk about seasonals. So I got to pass it to you as a person who really understands this stuff.
Well, I mean, first of all, human beings are habitual creatures. And the markets are driven by the repetitive behaviors of human beings, especially institutions. And not only do we know that we operate doing in a repetitive manner, paying our bills every month around the same time, getting up around the same time, voting for our leaders, especially here in the U.S. around the same time. But the institutions are moving money around in large quantities based upon quarterly behaviors and transactions. And aside from the fact that we know that we are creatures of habit and collectively creatures of habit, it works. I mean, we've seen the proof. I mean, look at the best 6 month switching strategy. For the past 7 years, it works. Yeah, it doesn't work 100% of the time. There are factors that come in and knock patterns and cycles off. But for the last 3 years, you've been tracking along with us. The 4 year cycle has been firing on all pistons. The seasonal patterns and enabled us to get, cautious in 2022 in the midterm election year and get back in October 22 with that classic October midterm year bottom. So it's important because it adds a little bit of an edge, gives you that edge with your fundamental and technical analysis. You know how we pick stocks. We wait for that sweet spot, that time of the year around October, November. Lately, we've been waiting for earnings season to get to finish up in November, and we've been grabbing some really incredibly growing, undervalued and under the radar stocks over the past several years, and the portfolio itself proves that out. So it works. That's why it's important. I mean, January barometer. You saw the table we put up. We put it on the webinar for members. I also put it out in the blog. At Almanac Trader recently, where you see the outperformance of up months versus down months, comparing January to the other 11 months of the year. And I have it up over here. You see the largest improvement over the next 11 months and 12 months when January is up versus down compared to the other months. So next 11 months after an up January, up 11.6. When it's a down January, only 1.2%. So it's an outperformance at 10.2%. Full years are 10.4. Full years are 11.2. But all the other months are well below there. So it's like, down Januaries are a warning sign. And up Januaries are confirmation of a continuing bull market or rally. So that's
Yeah,
why
and
it's important to me.
we're also going to talk about in a little bit about something that's been right about 100% of the time in seasonals. But I also get the same thing that comes up all the time when I get those questions. It's like, why do you use them? But you're absolutely right. It's that edge, like for me, it's the biggest edge. And not to mention, people like us were the only people talking about the market bottoming in October and 22. Like we were the only ones. And the reason why, and I just posted this the other day, I had a whole video about it in October 2022. And I posted it the other day and I've been talking about it because it's not something like the fundamentals are never going to bottom before price does. Price is going to show you first, but also how do you understand when a bottom could happen? Well, it was October, 2022. What happens at the end of October? What happens in that midterm election year? Like you talked about that as well. So like you put that all together and now you have an edge, then the price action starts giving you a signal, and then you're able to buy very low near a bottom in a market. And so like that was the bottom of to this day, still that's the bottom. So once again, it's like,
It helped that there were a lot of skeptics out there.
yes,
And
yes.
just to tell you a little story, because being the lone bull, contrary sentiment indicators don't work all the time, and they don't work as well at tops. It's very hard to call the top with bullish sentiment. It's something that's going on right now, but the bottoms are there. Back in 2011, I was at Barry Ritholtz's conference in the city, and I think it was Aaron Task was moderating a panel. And before that, he did a poll of who's it was when there was the sovereign debt issue, I believe, was going on right there. And he did a poll of who's bullish and who's bearish. Nobody raised their hand for bull except me. I was like, oh my God, I'm texting my partner. Let's go along here. It's one of those things that there's also a little anecdotal evidence that you can use. And it is an art, it's not a science. It's not all science. I mean, there's some science in there, there's math in there, but you gotta, trading and investing, you want to check your emotions at the door, but you want to be able to respond when the market's being emotional and you're not. So great call on your part too. Hopefully we helped you with that.
Yes, absolutely. That's what I said. You guys were also talking about it too, based on seasonals. And then I was seeing, I do a lot of cycle work too. So I'm also seeing cycle wise. And then I'm doing back tests and finding market bottoms. Like you put all this together and you're like, oh, cool, here we go. Like, well, let's go, So no, I mean, you and I were probably one of the very lone bulls at that time. There was nobody wanted to be in the market at that point. Still, even to
Not
the,
even,
even to 2023, nobody wanted to be in the market.
not even Tom Lee or Ryan Dietrich, my good friends,
Mhm.
I remember Ryan just commented that back in '02, I was the lone one out there. I mean, I think we even front ran those. We got ahead of those guys.
Nice,
We're pretty good at
nice.
that stuff too.
Yeah. I mean, it's once again, it's not 100% thing, like trading never is, but when you have all of the ingredients, like you said, you have your edge, which is the seasonality. And then you have all the ingredients kind of setting up. Like we were seeing relative strength in certain areas too. You've got all the seasonal ingredients. And we're getting into the end of the year. Like for me, like I know that really stupid rallies can happen at the end of the years in general. And not to mention, you have to think of, the investor psychology, like you said. Like I like how you brought up the sentiment. Like sentiment was so bad at that time. And even in the 2023, like something you have to think about is people got hurt really bad in 22. A lot of the fund managers that I'm friends with, a lot of other people in the markets, everybody got hurt. So when
Mm-hmm.
23 came and the market's in this massive uptrend, people still didn't want to buy it. And then you get into, that whole thing at the end of this year. And you guys were also bullish again too at the end of last year, which I was as well. And you guys, once again, it's helpful with that. And seeing like just understanding the seasonal patterns, that's the biggest thing like you guys have done for me, and like your work and my uncle talking to me, like understanding seasonal patterns, understanding that yeah, the market did give some back. It was a crazy rally all year long in 23. And then seeing that there's a possible bottom that could set up and rally November through December, nobody wanted to buy it, nobody wanted to touch it. So it was
It
really
didn't hurt
awesome to
that
just
we
see.
know the midterm election year low to the pre-election year high pattern.
Mhm.
The 4-year cycle where, amazingly, and there's a table I put out there, and this is one of Yale's discoveries. His line was that midterm years where bottom pickers find paradise, which is what we both jumped on there in 22. But I show the low of the midterm year. A lot of them occur in October. Surprise, surprise. Also earlier in the year around March and January, a couple of areas as well. But the high, the biggest cluster of highs for the pre-election year is December. and a good number of them on the last trading day of the year are right around there, which happened just, textbook quintessential pre-election year trade action in 23. So that sets us up for this year. We've got a lot of nervous people out there, which is just fine by me. We'll probably get some consolidation at different times throughout the year. If you look at some of the charts, we see that potential right here, February into mid-March.
Yeah, you guys put that out about February recently too.
Yeah, weak link in the best 6 months, but also in the election year, you see sort of a mid-month peak in February and going down to the Ides of March as well. And there's also some Q2, Q3 softness. And, you've got a couple of election year, patterns we have in the Almanac, the last 7 months of election years, down only twice, once in 2000 with the undecided election, and 08 with the great financial crisis. So there's a bunch of other factors when you get into the election year.
Was 08 a down January?
I believe it was.
Mm-hmm.
I could pull out my trusty Stock Traders Almanac and tell you, just since memory did not serve there, 2008 was, down nasty.
Yep.
6.1%.
Yes. So that's the thing that's always so important, is when you can really understand it. Like, that's the thing, like your father, you have taught me over the years. It's funny, I actually never use this office usually. It's in my basement, but I had to move because we're doing remodeling upstairs. But that's a picture of my great uncle behind me, the guy who taught me how to trade. So, he literally would have these conversations with me about like seasonals and things like that. So it's kind of crazy to have that conversation right now with him in the background.
I keep I'm at the home office, but at the other office, I have a picture of Yale over my shoulder behind on the bookshelf when I broadcast from there. So yeah,
nice,
for sure.
Nice. Yeah, I mean, it's seasonals being so important to me, and just about, like, if you're really looking at the market, you're really trying to understand things, and you want a roadmap. Like, that's the thing. Like, I think at the end of the day, why I'm good at what I do is only because I kind of create a roadmap, and it's based on seasonals, relative strength, where money's flowing, all of these things. And if I can create a roadmap, I can kind of be ready for where the market might go. And because of all those things, you're able to put it together. So every year, like, I buy the Stock Traders Almanac, and it kind of helps with that. So I think that's something that any trader can do. It's affordable. It's great. Like you said, you just pulled it up and okay, cool. Like, it's great because when you have it, especially like I travel and you're on the road, and you could just pull it out and read it wherever and take it with you and trade. That's
Oh my
the best
God.
thing about it.
You actually have something printed and a hardcover that you carry with you?
Yeah.
Oh wow.
Yeah.
I'm being sarcastic. Me too. I mean,
Yeah.
Everyone's got to have everything on their phone or it's okay to have some paper with you, especially if it's the Stock Traders Almanac. So
Yes.
do you get it as a subscriber to the newsletter as well?
Yes. Yeah.
So
we get it. Actually, I think I had two last year because I didn't know you guys sent them out, and I actually bought one. But I have one. It might be up in the upstairs office right now, but I know I actually was using it earlier, so I was thinking maybe it might be down here. But
I have more than one in different places.
Yes, exactly. Like, you almost need it, and it's nice to have one on your phone, and it's nice to have one in person. Like, it's small enough you can throw in a book bag. So it's, I really like recommend people picking that up. It's something that's kind of essential as a trader. And even if you don't use seasonals, like, having the calendar that you could just write in, like, for trading is really important. Yep.
And then there's a couple of inspirational quotes in there.
Lots of them, and very good ones. So, and that's the thing about trading, is like, you need to have that inspiration, because every single day you got to get up and deal with the markets, and it ain't always easy. So jumping into the seasonals and what we're looking at this year in the election cycle, because I know for me, man, this is the fun part about seasonals, is the election cycles, and they're always fun. And I thought it was funny because, you talking about seasonals, me talking about seasonals, Powell gets on and he talks about that election cycles have nothing to do with the Fed or printing money. And it's like, that's kind of funny considering that usually happens in the election years. So
he protests too much.
Yes, yes. So what are you seeing this year as, what the trend is this year? What are you seeing? We were talking about January. You mentioned something, and I mentioned something earlier about the possibility of a very high win rate seasonal trade. What were you looking at in January this year?
Wait, what was the high win rate seasonal trade?
January barometer and the election year.
Oh, in the election year. I'm sorry. I was about to dial up the seasonal pattern chart, but this is amazing. Somebody made a comment of it, and I went and ran the numbers. And back to 1950, when the January barometer is up, or January is up for the S&P 500, every single election year, going back to 1950, starting with 52, is up. 100% of them are up. The average gain is 15.6%. The weakest gain was 9% in 2004 for the S&P 500. Just amazing, solid numbers. When the January barometer is down in election years, average gain minus 1.1%. Not a horrible loss, but you had 08, you had 2000, you had 1960, and some other mediocre gains. So it's just further, to the point that the January barometer is important. It's even more important in the election year, and that seasonal pattern chart that we've been tracking shows 2024 popping up to that sitting president line that we put out there. It's also in the one that's in the Stock Traders Almanac on 24 edition on I think it's page 11 if memory serves. But we saw a little selling, a little profit taking earlier in the month, but now we're tracking that sitting president trend of about 12.8% for the S&P 500. And you've got somebody in office who's actually running for re-election, an individual, versus the open field, which is down 1.5%. Not a huge loss, but quite a risk reward ratio difference. 12.8 versus minus 1.5. So we'll be tracking that, and if it continues to hold that line, the longer it does, the more confident we'll be for our forecast, our outlook for about 8 to 15%, sort of average to above average gains for election years based upon what we're seeing so far with the setup here. A little bit more for NASDAQ and S&P, probably more in the 8 or 10 area for Dow. Small caps are a concern. I've got a position with the IWM where it's on notice. Not looking to get out of that unless it breaks down further, but that's also part of our seasonal trade. And we really don't like to mess with the best months trade until we get into the last month of the best months and start looking for a MACD sell signal. So there we're combining the seasonals with a technical trigger. We also get in with a MACD trigger, and it has improved the results of that historic seasonal pattern that continues to work.
Yeah, no, I love that. And when you're doing that, and the best 6 months, and it's kind of interesting because, if you've looked at seasonals for years and you've traded with seasonals for years, you understand that the market goes through cycles over and over again. So like when it's the middle of summer and the market's coming down, I'm not panicking and going, oh my gosh, I'm just like, it's normal. That's what happens in the summer. Like, I think that's also an important part of seasonals, just understanding those things so you're not panicking or making stupid decisions.
And when you see that summer rally,
Mhm.
not buying into the hype that it usually sells off,
Mm-hmm.
especially
Yes.
if it gets a little too hot in July. We've had a couple of nice calls recently, getting out of the way of that and not jumping on the bandwagon, especially in 22. Was key to everyone was kind of believing we had bottomed in June, and we're going to start working higher, and then we sold off after that August peak, which lined right up with the seasonal chart. So
No, and I think
definitely,
go ahead.
definitely important to be prepared for those, not just those times a year where things are looking positive, but to prevent you when things are most dangerous or more at risk, like in the summer months. So
Yeah, I mean, it's very important to just understand the seasonal trends. you know, like the understanding them in all different types of markets. And you see a lot of traders sometimes will go, oh, I don't know if that matters. It's only right 60% of the time or something. I'm like, you would kill to have, like, if you design systems, which I do, you would kill to have a
60% is the
system,
number.
yeah, that has a 60% in front of it. Like you would kill,
I
like,
mean,
because really we're looking for positive expectancy. And if you're able to have a 60% win rate, 70 sometimes, you know, even looking at what is it? Heating oil right now is at this crazy 80%, gasoline too. You know, even if you're looking at that type of a win rate and you're able to go, hey, I'm going to have a stop loss here. I'm only going to lose this much of my portfolio, and it opens up major upside. Like that's why seasonals are so powerful, because you can put those two things together and now you're really able to make some money. And positive expectancy is really everything.
I mean, the 60% number is important. You know, from being a user of the Almanac, that those bullish and bearish days, we actually put the little happy bull on the day of the calendar and the sort of angry bear, as we refer to it.
Yes.
Those are days over the last most recent 21-year period, and we use 21 years because it's an odd number and it's also a decent length of time, but recent. So over the 21-year period where the day is up 60% or more of the time is a bullish day, and where it's down 60% or more of the time, or up 40% or less of the time, that's where you get the bear. So that's, I mean, 60% is an edge. It's you know, it's almost like the odds of the craps table when, you know, on the 6 and 8 are taking your odds behind the pass line there. It's like you got to take that edge.
Yes, absolutely. So now let's talk about the best 6 months. You talked about it a little bit earlier, but best 6 months, worst 4 months, I think it is. What is it? Yeah, worst 6 months,
Best six, worst six for
yeah,
Dow and
best six, worst
S&P.
six.
Best eight, worst four for Nasdaq.
Okay. So you have this system of the best 6 months. And basically, like, it's really interesting if you really study it. Like, you could read the almanac, sure, but if you really go back and go through the charts, you're like, wow, there's major trends every year around these times. And I think the other thing that's also important, and we could talk about this a little bit, but you could tell me what you think. So 2020, I had what the best 2 months of my fund's existence ever. So basically, it was November 2020. The election's happening. It's the end of the world. Remember, everybody's scared. The perfect scenario, just like we're talking about in 22. Nobody wants to be in the market. Everybody's terrified. You know, I get a phone call from a friend that's like, "Hey, we're having this get together. Don't bring your phone." And basically, it was like a conversation about it's possibly the end of everything. You know, and everybody was feeling that way, you know, and like every single person. And if you looked at the short interest, it was so high. Every hedge funds were short, retails were short, everybody was scared, even commercials weren't buying, you know,
Mm-hmm.
producers. Like it was fear like I've never seen it before. And then, you know, I basically go home from this get together and I stay up for day. I actually got sick because I stayed up for so long just through this election cycle of like, you know, buying like crazy. And like I almost thought I was insane because I don't do that usually. And so I
Mm-hmm.
put that out actually for subscribers so they can see that if you guys want to ever look at that, that's on the original website again, aaoresearch.com.
Mm-hmm.
Go to November election. But if you check that out, basically the market explodes higher right after the election, no matter who wins. And I think I learned that from you,
Mm-hmm.
because you guys talk about that, where it's like it doesn't matter who exactly wins the election. People are kind of just like, oh, I'm glad that's over.
It's just happy it's over, for sure.
Yeah.
Exactly. It doesn't matter which party. It's about the actual cycle of the event, for sure.
Yes.
Very important point you made.
So this year we're getting into it, and you know, 2020 was an anomaly. You had the shutdowns, you had the crash. Obviously, the market somehow roared right back, which was insane. You know, I've never seen anything
So
like that.
it was surely generational.
Mm.
Um, you know who Larry Williams is?
Yeah, yeah.
One of my old mentors, you know, was worked with my father years ago. Great, one of the best cycle analysts out there. Great trader. I took a quote from him from 2020 from COVID. It's in the Almanac. I don't. You may have seen it. Said when people start buying toilet paper, I buy stocks.
Yes. That's so hilarious.
So when everyone's freaking out that they got to save up on and going to stock up, and the market's going down, you gotta be. That's when you use your contrary thinking, So anyway, that's just a capture secret, and that's part of my job is to grab these quotations out there and put them in the book.
No, it's perfect because that was real and that was happening, and it was
Mhm.
a absolute disaster for everybody. It was a mess of a year. Trading was hard. I mean, I remember even one point like we were actually doing well in March. We had a good month because we ended up we're a trend following system, so we got pretty
Mhm.
short. But at the same time, it was looking at it like, is this actually, I'm kind of in fear at the same time. Like, am I ever going to cash this out? Like, is there money going to be left? Like, what's going on? Because the market was
Right.
breaking so hard, and I've never seen anything like that. And so, getting into this year, I think people are kind of like remembering that. I think that's why they're so in fear of like this possibility. And right now, there's a lot of fear. Like, it's this possibility of this happening again and again and again. It's like
There
people have
there
to
are two
stop fight.
wars going on,
Yes.
still.
Yes. Yes.
There's
There's a
some
lot happening.
geopolitical risk.
Yes. So there's a lot happening. So this year, in the election year, you're still, even with the political risk going on, you're still saying like most likely the market will end up.
For sure.
Yes.
It's
Yes.
been declared publicly in writing many times in the
Nice.
past 2 months or so. And even if you look at my outlook in the Stock Traders Almanac, which was written and finalized on about June 21st, 22nd, if memory serves, or somewhere around there, June 15th or something, over 6 months ago, like 7, 8 months ago, I was still bullish for the election year then, which is a bit of an art. It took me a while to learn how to do that from my father, how to, look out 18 months when we're publishing this book, because you got to get it ready for the next year. You really have to rely on history and the cycles and patterns, because you don't know what is going to be happening 6 months from then, or 12 months or 18 months. So you have to. The only thing you have is the past, as Patrick Henry said. I know of no way of looking in the future but by drawing a line from the past through the present. So there's not much else you can rely on. You don't have any charts to look at going forward. You don't have any earnings. You don't have any Fed or economic numbers. So what else do we have to plan with other than history, cycles, and patterns?
Yes, and I love that outlook because I think so like there's a quote, and I don't remember whoever said it. I think it was Keynes actually, or somebody. I'm not sure. But somebody says more money has been lost in corrections, or sorry, in trying to predict corrections than the corrections themselves. Like, and that's the truth, is like if I sit here every single time something happens in the world, I would never be in the market.
Right.
I would never want to own anything. I would never make money. It's impossible to make money like that. So, you're able to look at the cycles, go, okay, here's the yearly trend. And so you're looking at the yearly trend going, okay, most likely the probabilities are very high that the year ends up. We have a of January. So you put that together. We're still in the best 6 months, which ends in April. So, we have all of these things kind of saying like we're good in the market right now. Yes, we could see some volatility right around now, like you said, the Ides of March, February, but I still think that, like you said, and we could even see some volatility in the summer, but I still think the year ends up as well. And I think that people also need to be ready for that, because we're in the business of looking forward, not backwards. We could talk about right now easily, but talking about into the election, what are you seeing after the election? Do you think the market's going to just go up? Do you think it's going to be volatile after the election? What do you think?
You mean the rest of the end of this year,
Yeah,
from November?
the end of 24. What are you looking at?
New highs, higher than new highs for the year, and probably all time. 2025, 2026, the cycles, and some of the other analysis is leading me to believe we might not be as strong, and we might be entering something a little more secular, that's a little bit flatter, a little more sideways after this run we've had. I don't know if you you've tracked the super boom outlook, but you know, we made a forecast back in 2010 for Dow was at about 10,000. We made it. I made a forecast for 38,820. We just missed it, and that was predicted to happen by 2025. We're there. And after that, this was a cycle, a pattern that Yale discovered back in '76, after war and inflation and with the technology factor. I think we could see some sideways action, you know, in the year or two after this election. But the end of this year looks bullish. It's even more bullish when you get a change of party. But after a weaker year, you know, we'd be down probably if you know, we get the incumbent not winning, and then there's this, you know, usual pop. But either way, as you were saying before, once we know that the election's over and we get a decision, the market rallies because you know, the uncertainty is over. That's what the problem was in 2000 when we didn't have a decision for several weeks into about mid-December. So again, after a pause over the summer, we'll probably rally in the fourth quarter again.
Yeah.
Making new highs.
No, I love that. And I'm in the same boat. You know, I definitely think that's possible. And once again, it's like, you know, we're not sitting here and we're, you know, if the market's crashing every day, we're not going to say, well, it's going to be a great year still, don't worry. And, you know, we can get out at those points, but for now it's like, yes, we're in a part of the cycle that's giving us all of the seasonal predictions that it can, that the market could go higher. We have the market in an uptrend too. That also tells us something. So if you have put all these together, now we get to the end of the year, because everybody's going to be worried about the election. That's why I wanted to ask that. You know, they go, oh, what, you know, they're going to hear you say that, and they're going to go, well, what if Trump gets back in, or what if Biden's still in, you know, and what we're trying to say is either way, it doesn't matter. You know, here's a good one. And I haven't found this. Look, I meant to look up this article. I should look it up and post it on here. But right before the election in 2020, there was analyst after analyst. If Trump gets in by energy, by the banks, by what else was it? Industrials. And if Biden gets in by tech, by solar, by this. And what's funny is it was the complete opposite way around. You know, like it was by energy, by the banks. Tech started to be the underperformer that year. Yes, it went up, but it was majorly underperforming everything. So it's like, you're able to kind of look at these seasonals. And I also, you know, we'll talk about this a little bit too. You also look at, because I haven't really figured out how you get this edge too, because you do this and you do this well, which is you also find sectors that are also performing well in seasonal cycles. So I'd love to talk about that a little bit more, because I know you, and we could talk about even October, you know, October being a small caps one. You know, you want to buy small caps.
Most of the sectors hit their bullish season in October, ironically, but it's the same basic analysis. I mean, you just, you know, run, and it helps to use the older stock indexes. I know people want to look at the ETFs and some of the, you know, new indices, but if you have something that's got a lot of history, like the XOI or you know, the biotech indexes or the SOX or things that have been around for a while, there's a lot of data, and you can look at the patterns over different time frames. You can home in on sector seasonality. We have a whole page in the Almanac on that. It's actually goes across 3 different pages. And, you know, we work with that every single month and put out new buy recommendations. I mean, we just put out a buy on natural gas, the stocks, the natural gas stock index, which is the old XNG, and the ETF we look at, we use as FCG, the First Trust, whatever, Revere Natural Gas. We'll look up the name of the whole company. I actually went long that yesterday morning at our buy limit, the FCG. So, you know, you look for the same type of correlation with the underlying index and the ETF for the whatever correlated, you know, security you want to trade, tracking the seasonal pattern. Okay, if it's not tracking it, you know, maybe you don't want to consider that seasonal trade, and then you look for a good buy entry, buy limit or buy point based upon the technicals, and you want to confirm that, you know, there's a fundamental or macro trend reason that supports the situation, which I think energy is supported by what's going on in the world and the usage, and and a little bit of you know, some of the luster coming off the EV market. You can see that with Tesla, and you know, I hear there's a lot of those electric Ford F-150s sitting around not being, you know, used, and then we saw that whole bit up by the football games up in Buffalo where the batteries were frozen, they weren't working so well. So, you know, pretty sure gasoline, oil, natural gas is going to be used for quite some time. So
Oh yeah, you know, and the feelings that so many people are like on this, you know, I have so many friends that probably, you know, this was starting in 2018, you know, like, oh well, I understand like the idea of buying energy, but I want to be involved in the things that are going to change the planet. And so as a trader, you know, it's like you're not, number one, you're investing in something, pulling money out. You're not changing that company to make it grow. Like you're not involved with it. As a trader, you have to really pull your head out of those feelings. Like if you care about the planet in some way, or you care about this company because of this, like just don't buy that. Like it's like stay away, because you'll get too wed to a
I don't
position.
mix my civics with my trading.
Exactly. Yes.
You know, I've done plenty of things as a citizen, and I actually was a trustee in my village for a period of time. I ran for office and won. So, you know, I don't need to prove my civics through my stock trading. My father was a big fan of solar energy. We actually had a solar hot water panels on the roof back in of our house back in the 70s and 80s. And, you know, it never made any money. I mean, yeah, there's been some trades there over the recent years, but, you know, it sounds like it should be great for the planet. I'm rooting for it. I think if people really wanted to do something to the planet, they'd probably want to gravitate towards nuclear energy,
Yeah.
which is a lot safer and a lot cleaner and a lot more efficient. So the
More
batteries
profitable.
are more profitable, 100%. And uranium's a play that I'm starting to look at too. But with these electronic cars and the vehicles, I mean, the footprint it takes to make the electricity, to store in the batteries, to mine all of the rare earths and minerals that go into the batteries, it's just as dirty as you know, starting your car up. And then these people in Davos are talking about, you know, climate change, but they're flying their private jets over there with this huge carbon footprint. So it's a lot of hypocrisy out there. And you know, as a trader, that if it's not working, we're not getting into it. If there's no setup, seasonally, fundamentally, technically, we're not getting into it. I'm sorry. I support the planet in my personal life and civically, but not with the investments. I'm not a huge ESG fan. You know, I like companies that make money. If there's something sinister going on there in their governance, it'll come through. It'll come through in the charts. It'll come through in the you know, 10Ks and 10Qs. So that's where I focus on numbers, whether it's fundamental reporting or technicals and the charts. And you know, I used to talk to small companies and micro cap stocks and talk to CEOs. And you know, there's another quote from the Almanac: if you get information from the president of the company, you'll lose half your money. You get information from the chairman of the board, you lose all your money.
Yep.
So we just run a fundamental screen, and then we find out why it came through later. You know, like super microcomputer we picked in 22 at 81.93. We didn't know exactly what they were doing. You know, we had an idea, but they were throwing off huge growth and acceleration of growth and revenues and earnings and great valuations. And you know, we found out later that they were part of the AI craze. And then one of the big caps I'll mention for you guys right here is NVT. I got to check the name of it because you know, I don't. It's Invent Electric, NVT, Nancy Victor Thomas. They secure, it's up a bit. It's up a bit this year. I think it was off a little bit yesterday. Let's see, where is it on the list today? It's off a little bit today, but they are protecting the they have an earning announcement today. That's why they're probably selling off into it. But they protect the grid, the infrastructure, all the data centers and the buildings with securing the electrical supply and temperatures and all kinds of things. So maybe not as sexy as SMCI, but they're involved in supporting the data centers around the AI economy.
Nice. No, I mean that's great, and we've got some stock picks, and I hope you guys really enjoyed this because we got to some understanding of seasonal patterns. We got some stock picks. We got some trends for the year. Like you guys got a lot of stuff here, and so definitely check out Jeffrey's website. Check out Jeffrey on Twitter. He's also on Spaces a lot too. He's also putting out podcasts a lot. He's on Fox too. Just make sure to check out Jeffrey's stuff. It's definitely valuable. And you guys who've actually been on here or follow the Substack page or the newsletter, like you guys know, you've seen me use Jeffrey's stuff. So once again, thank you so much for coming on, man. It was a blast.
Great talking to you, Jason. Thanks for having me, man.